One, begin. Hey, good afternoon. Welcome to Debbie Grigg Realtor. And today we have a special guest, and his name's Richard Yepes, and he is with Next Mortgage. That is our in-house mortgage company for Next Home. And
How's it
we
going?
have a ton of information to share with y'all today. So, Richard, why don't you tell us a little bit about yourself? How many years have you been in the business as a loan officer?
So, Debbie, I've been doing this since 2004 when I started working for Countrywide Home Loans. So I've been
Oh,
doing it for almost 20 years.
wow. That's a long time ago.
A little bit, a little bit.
Yeah, I remember Countrywide.
Yeah, I always tell my customers that I've been doing this so long, I've already done all the wrong stuff already. So I'm just doing all the good stuff now.
Okay. Well, Next Mortgage. It's pretty exciting because you can do a lot of different types of loans. And that's what we're going to talk about is how can a buyer purchase a house without any savings in this market?
Oh yeah, that's I think that's always the great topic of the conversation. How can we get buyers in the homes?
Right. How can we? You've got all the types of financing available. So let's try this. Can the seller pay 3% toward buyer's closing costs?
Oh yeah, in some cases, the seller can pay 6% towards the buyer's closing costs.
That's even better. Um, what type of down payment assistance do you have?
So I think probably that's the number one question I'm getting in 2022 towards the end, and now in 2023 is down payment assistance to get buyers in the home. And the great thing is that Next Mortgage offers actually four down payment assistance out there for our buyers. So we offer a program called T-Shack, which is kind of like your Homes for Heroes kind of initiative that the state of Texas is that issues that we've kind of partnered up with, and we can kind of go into detail of that. But T-Shack is a great program because it allows a buyer to get up to 5% contribution towards the purchase of not only their closing costs, I mean, not only the closing costs, but the down payment. So that 5% can go towards the complete cash to close. And the great thing is that if you're in a loan program where you're only putting down 3% or 3.5%, it's covering your down payment and it's covering the majority of your closing costs where you're bringing little money down to get into a property.
And so what you're short, then the seller could compensate the difference.
Of course. So the great thing about this program is even if you get 5% from T-Shack, it
Yes.
doesn't restrict the amount of money the seller can give because different loan programs have different sellers contribution requirements. So if T-Shack gives you 5%, and let's just say that the seller is willing to give you 3% towards your closing costs, in some cases, you may get money back for buying a property at closing.
Well, that's not bad at all. I mean, that's a win-win. The seller gets a buyer, the buyer gets their dream home,
Oh yeah.
and
Yeah.
they don't have to wait to save their money.
Oh
But
yeah.
then uh, let's think about this. Is there a credit requirement, a credit score, a job employment history? What all goes into play for that free money?
So the great thing is that T-Shack does have a credit requirement. It's pretty minimal. It's 620. So as long as you have a 620 FICO score, you can participate in getting a T-Shack. Now, the great thing is that we do offer rapid rescoring here at Next Mortgage. So if you have a score, let's just say you have a 610 and you're 10 points away from that free money, we can help you raise your credit score to a 620 so you can take advantage of that. So FICO score is a requirement per the
Mhm.
program, and then also income, but there's two ways of income. So as long as you make a certain LMI, which is low to moderate income for a T-Shack, you can receive some of that down payment assistance. Well, let's just say you make more than that, because all of our first-time home buyers, maybe they got out of college and they became doctors or they became lawyers and they're making a lot more money. But of course, they just got out of college, so they don't have a lot of savings like a lot of
Mhm.
people. The great thing is that T-Shack still has a program for them, even if they're making more than that allotted income, where they can still get some money too.
Okay, and that thought just crossed my mind. It could be a veteran who just came home from
Exactly.
service and now he doesn't have a job. with employment history, but he's got a letter of employment and
Right.
he's going to start work.
And because
So,
VA loans are 100% financing, and all they need to pay for is closing costs, if T-Shack pays their closing costs, a veteran is coming home, he's out of the service, he has his civilian job, and he's not putting any money down whatsoever.
and
And
that's
in
a
some
true,
cases,
true zero
it's
down.
true. In some cases, they could even get their money back, their earnest
Okay.
that they put down.
Okay. So I have a problem. They say it's free. So it's a grant program, right?
It
So
is, yes.
that grant, I'm going to sell my house in 3 years. I want a grant program. Can I do that?
So if you close on a T-Shack, if you do take the money, there is a caveat. They do want you to stay in the home for at least 3 years. And so the great thing is after those 3 years, the money is forgiven. You don't have to pay it back. It's your money. So the money that you got to get into your home, as long as you're staying in the property for 3 years, you're good. Well, let's just say that, your job moved you 2 years into your home. You're like, oh man, I work in the oil field. Now I got to move to Louisiana. I no longer stay in Texas. Well, the
Right.
great thing is that what T-Shack will do is they'll just make you prorate an amount to pay back. So they won't make you pay back the full amount that you received at closing. They'll just prorate on how much time you have left to that 3 years. So if you just have a year left, they'll prorate that amount of what you got at closing and they'll say, look, you're moving out of the home. You didn't meet the 3-year requirement. So just pay us this amount of money that we gave you to get into the home. And then none's the wiser after that.
Right. Because you know what? That loan does show up on a credit report. And I learned that there is a proration. And it was 2 years that my client had owned his home and he was a nurse and they took a job out of town during COVID. So he had to pay a year.
Oh, really? Did he?
Yes, a whole year.
And the
So
good thing is that know all of that up front, and we explain all down payment programs that
that's
you
right.
receive because we want to make sure you're in the know when you're at the signing table and even before the signing table. So no surprises.
That's right. So, out of all the grant programs, which one gives you the most bang for your buck? Is it T-Shack or is it HomePath or Seth or the mortgage
So,
credit?
so Seth is another Seth Gold Star is another down payment assistance program we use. Their requirements are a little different as far as what T-Shacks are, as far as the documentation that they require, but it's the same kind of game. They're willing to give a certain amount of money to help you get into a property. And then we offer another program called Chinoa. Again, another down payment assistance company that offers a certain different kind of loan program that has different requirements. They all kind of have the same money given up front and requirements for either having it forgiven or paying it back if that's the case. So I think T-Shack is probably the best one because the paperwork, it's not as tedious to get approved for the T-Shack. As long as you have the FICO score and as long as you have the income that T-Shack requires, you're good as gold.
Okay. Okay. So what's the interest rate?
So the interest rate flexes. Everybody knows interest rates have kind of gone up lately. So the interest rate kind of determines on how much money you want. So if you're approved for 5% towards your closing costs, and let's just say that 5% is $15,000. So if you want the full $15,000, then the interest rate is a little elevated than what interest rate would be if you got no money at all. And so let's just say you don't need $15,000. You just needed enough money because you had some savings and you just wanted $10,000.
Right.
So determining on how much money you take, the more money you take from T-Shack, the higher the interest rate is going to be. The less money you take, the lower the interest rate is going to be. So if you got approved for 5%, but you only need 3%, then your interest rate's a lower rate than what it would be if you got the 5% interest rate. So interest rates right now on a 5% for T-Shack right now are around 7.25, 7.5, just depending on every day. They change every day.
Okay, so here's my next question for you. Is it the same as our market rate? Or is it higher than our market rate?
It's usually a point higher than our market rate. 7.25 is not far off from where we're at in market at 6.25, 6.5. So the way I just kind of bring it up to my customers is we kind of look at what a payment looks like with no money at all and what the payment looks like with you receiving money. It's usually a $75 to $100 difference. So if I said, look, if I give you $15,000 right now to help you get into a home, or your monthly payments $100 less, it's really that we give that choice to our buyer to let them know, hey, here are your options. You can either come up and figure out how we're going to get this home on your own, or we can help you do that. And your payments fluctuated an extra $100. Now, if you had to give up Starbucks for a month, so you can get $15,000 to get into a property with no money down, I think I'd give up to Starbucks.
Exactly. Okay, so do they have to take an online course for the grant money?
There
I
is a
mean,
home buyer
nothing's
seminar.
free. They got to get
There
some
is a
kind
home.
of sweat
Right.
equity.
They want you to know, I mean, there is a home buyer seminar. And the great thing about that home buyer seminar, it's online. You can take it at your own accord. You don't have to go to a class. You can do it online. But there's some good information in there too. It's not just oh, I have to listen to this because I'm receiving it. There's some good money about financing and definitely investing and knowing that your home is an investment as well. And this may be a first time home, a second home, but the
Right.
good thing is that the information that you receive in that class is information that you can use in other avenues of your life.
And I'm glad you said second home. It could even be your third home, and you can use this money.
Oh yeah.
It's not a true first-time homebuyer program like it was labeled years ago. It is now for anybody, but there is a requirement that you couldn't have owned a home for a past year.
So the requirement is you can't be a current homeowner. So
Current
in,
home
in,
owner.
in the eyes of mortgage law, and we're going to let you in on a little secret, to be considered a first-time home buyer again, you have to not own a home for 3 years.
3 years. Okay.
So if you sold your home and let's just say your job took you from renting to renting to renting and you just didn't buy a home within that period and then you're ready to buy a home again because you've been placed somewhere, you can still get those first time home buyer initiatives if you haven't had a home on your credit report for the last 3 years.
See, I knew there had to be a catch. I'm glad I asked that question. Okay. What's the lowest credit score that out of all the programs that you offer that you could
Uh,
apply for to get some form of grant money?
So 600 is the lowest. Chenoa, which is not a Texas down payment assistance, it's a national down payment assistance program, offers you as low as a 600 FICO for you to receive some kind of down payment assistance, whether it be 2% or 3%. It's still something.
Okay. All right. Well, then I'm going to switch this now and go from down payment assistance to another one that we have created. And that one's called HomeFundit.
Oh
And
yeah.
it's exclusively through Next Mortgage, correct?
Oh yes. So
Yeah.
HomeFundit is a proprietary down payment assistance that's only you can only get it at Next Mortgage and CMG Financial. So if you go to Bank of America and say, hey, I want to help HomeFundit my home get into my property, they're gonna be like, I don't know what you're talking about.
Right. Never heard of it. Okay.
Right.
So this is going to be like, I've got some student loans to pay off and I'm getting married and I want to take a honeymoon, but I want to get married and have a house. So, parents aren't going to buy all of the above. So that's kind of like what HomeFundit's for, right? They
So
could use this money to buy their house,
right.
fix their credit.
So the easiest way I can explain HomeFundit is that everybody knows what GoFundMe is. There's always a GoFundMe account for school fundraisers or a GoFundMe account to help. Sometimes like if someone's having surgery, let's help them. So what HomeFundit is, it's essentially that it's a crowdsourcing. Uh, um,
For a
you know,
mortgage.
or mortgage. And so the great thing about it is that it changes the way people get a gift. Now, before HomeFundit, if you wanted a gift from your parents or from family to buy a home, there's so much paperwork involved. And then the gift could only be from immediate family. So if your parents were going to gift you $10,000 because they set that money aside and they said, hey, when you buy your first home, we're going to give you $10,000. We have to see where the $10,000 came from. We need a copy of their bank statements. We need a copy of the money going from their account to your account. It's a
Mhm.
process, and sometimes it could delay closing. The great
Mhm.
thing about HomeFundit is that you create this great page. We create this great page for you, and it's your story. The story on HomeFundit is everything about you, the buyer, and how this is your first home. Either you, like Debbie said, either you just graduated from college or you just got married, and this is your story. You're buying your first home and you need help doing it. Well, the great thing about HomeFundit is that anybody can give towards your HomeFundit page. A teacher, your church, your friends, Facebook, Instagram, wherever you share this link, anybody can donate to the cause of you trying to buy a home, and that money is your money. So that money, when you use that money, it can go directly to your closing costs, your down payment. And so also another great thing about HomeFundit is that if you're truly a first-time home buyer, remember that 3-year rule? If you're
Mhm.
a first-time home buyer, then the great thing is that for up to $2,000, for every dollar that you raise, I'll give you $2. So if you raise $1,000, I'm going to give you $2,000. And if you could just do that in a week, you'll have $3,000 to go towards the purchase of your home. It can be used for an appraisal, for earnest money, for the inspection. That is your money to go
Mhm.
towards the cost that it takes to get into a property.
And it doesn't expire. So it might take you 2 years because you're buying a castle and not a little first time buyer's home. You
Right.
want a bigger home. So the longer you make the money, it's all in your account, just like at the bank.
Right.
And does it make interest while it's sitting in the account?
It does not. It does not carry
Okay.
any interest. However, what do we tell? Like I would tell a college student, hey, you're going in as a freshman, get this account going now. So by the time you're a senior and graduating, you'll have money to get into a property.
That's not a bad idea right there. Or if you're even going into the army,
Yeah.
whatever, everybody has some type of delay in their life. It seems like more today than ever before. But the money's there and you're crowdsourcing for 4 years or 2 years, the more the merrier.
Exactly. Exactly. And
And
so
you can
so
share it everywhere. I mean, everybody will be able to donate. And I think it's pretty neat.
so if you think about the possibilities of this program, our highest person that's raised the most money on this program was a lady who raised $44,000 just from putting this message out of her trying to purchase a home. And that money was her money to do it. And so that
Mhm.
money was able to not only cover her down payment and closing costs, but it paid more towards the home where it brought down her monthly payment. And so just imagine if you raise, let's just say $10,000.
Right.
That's a big leap of money to get you into a property where that means you could save, if let's just say you had $10,000 that you were going to use, you could save that for the furniture, for the refrigerator. You could save that your own money, use the home fund
Mhm.
for getting into the home, and then your money that you currently had, you can use that for making your home a home.
Right. Right. Well, that is awesome. I mean, I'm going to put the link in I'm going to put my link in there and I'm going to put your link in there.
Okay.
Okay. When I finish and wrap up this video. So I think that's great information to have. And hopefully it will be out there in the World Wide Web and everybody will take advantage of it. For those who can't buy a home today, share their story.
Right. You
And
definitely want to go to Debbie's link too, because Debbie's link will help you get started on starting your own page. And if you have any questions, you can give her a call and she'll walk you through it.
that's right. And of course, we always know how to reach Richard. So again, I want to say thank you so much for sharing all this great information with us today. Um, I hope I'm excited. I learned
Yes.
something. And I mean, I've done this for 31 years and I still learn every day. So if you can excite me, I hope the buyers are excited.
So
So
we're excited about 2023, Debbie, and we always love our next homies. And we want to get people in the homes. You know, the market's going to do what the market's going to do. Buying a
mhm.
home is still the best investment that you can do today. And we want to help those dreamers of getting into a home. We want to help you pay for it if you need it. get you into a home and get you into a great loan program that's going to get you the home of your dreams.
That's right. Because guess what? We have a lot more videos that we're going to do. And I have a lot of little sticky notes over here of ideas that we came up with the other day for our video. So y'all stay tuned and keep watching our channel and have a terrific day. Okay. And thank you so much, Richard. Thanks for
All
your
right.
time.
Call us if you need anything.
Oh, I certainly will. Thanks. Bye-bye.